All right, this analysis is on New Zealand US dollar. As mentioned in the previous analysis, everything low risk, okay? There's a lot going on fundamentally, meaning it could overpower what we see technically. We're waiting for double, triple confirmations before we enter any trade. We're managing our trades properly. We're moving SL to entry once TP1 is hit. We're doing all the right things, and that's very important, especially in the market today. With New Zealand US dollar, let's pay attention to the push and exhaustion cycle, especially when breaking area sensitivity. So let's start on the monthly as usual. Let's get into it. All right, New Zealand USD, starting on the monthly, we're looking for area sensitivity. So here I see sell sensitivity. Here I see buy sensitivity on the monthly. We identified our zones. So after we identified our zones, let's try to make sense of things, okay? So here we see a strong push to the downside. Buy sensitivity entered at price's lower zone. This was the beginning of our higher time frame exhaustion, where then sellers re-entered the market for a continuational push to the downside. Okay, we're still on the monthly here, just taking a closer look at price action. First thing I notice is this strong bullish engulfing candle close telling me that the first wave of buy orders have entered the market. Now, we did not enter long at the completion of this engulfing candle close. Why? Because first off, this was just confirmation one, and secondly, we do not enter at a completion of a push. There's always an exhaustion for a better entry. So after identifying our mid-range zone, what are we looking at? Well, this was our monthly bullish engulfing candle close, okay? Here's the beginning of that bullish engulfing candle close exhaustion, but what do we see? We see a strong pin bar followed by a strong bullish candle. This tells me that buyers are trying to push price to the upside. So before we take it down another time frame, we can already see the importance of price's weekly mid-range zone. We can suspect that if price breaks it to the upside, well, it has a buy sensitivity it needs for that continuation. And if price fails to break to the upside, well, it's likely going to come down for at least a second confirmation at lower zone. So we've taken it down another time frame. We've identified our lower time frame area, a sensitivity, and this is simple. Here's that completion of that bullish engulfing candle close, that exhaustion, and we're waiting for that continuational push to the upside or that break to the downside. So we've identified our zone. Okay, so now we're trying to look at flow, okay? I see lower high, so let's identify our downtrend. So here we are on our higher time frame cycle of push and exhaustion, but we also know that these cycles happen on the lower time frame. So here's our lower time frame push and exhaustion cycle before a potential continuational push to the upside. We've taken it down another time frame. We've identified mid-range sensitivity. Okay, so here we see mid-range sensitivity in green. Here we see lower highs, which is why you see this downtrend. And here's a squeeze in itself. So what does this mean? We're trying to see if price is going to make its way to its weekly mid-range zone, or see if price breaks its daily mid-range zone to the downside, because that tells us a lot about where price is going next. So we need to identify flow and potential entry. So here we see this squeeze. We see a push to the upside. This is going to be a push. We then wait for exhaustion and price action confirmation, which is a bullish engulfing candle, to the upside. So let's simplify this one more time. If price fails to break its daily zone to the downside, we know that price is going to have enough buy sensitivity for its next push to the upside. So we're going to stay patient, wait for completion of push, wait for completion of exhaustion, then price action confirmation like a bullish engulfing candle close before entry to the upside. So your signal is going to look like this. Again, we're waiting for a push, we're waiting for exhaustion, price action confirmation to the upside. Now, there are a couple scenarios that would make this trade invalid. Firstly, if price makes a strong push to the upside and fails to come back for exhaustion, this trade becomes invalid because risk reward is no longer optimal. Secondly, let's say price makes a push, comes back for exhaustion, but fails to see the buy sensitivity it needs and continues to the downside. This trade becomes invalid because we know that there's not enough buyers in the market to push price to the upside. And then we will readjust our analysis and start looking for an entry.